if there's any issues, or if you'd like me to jump in and answer a question. I will be sort of grabbing the questions at the end, and we'll be having a dedicated Q&A session right at the end of this evening. I'd just like to say hello to everybody. My name's Jacob Field, and I'm the founder of ripehouse.com.au. If I could just ask if you could just let me know where you're listening to me from tonight, and we can see where a few of you might be from. We will be focusing on Victoria this evening. You know, a lot of content and some of my recent webinars have been a lot of focus on Queensland. We've touched on Tasmania, South Australia in the last few months. A few of you have been looking and searching and talking with me and some other and Anna here at Ripehouse around Victoria. I have noticed it come up in a few information sources with some great potential of late. There are some key regions in Melbourne metro area that are worth looking at, and I thought for a change we'll potentially be focusing on that Victoria region tonight. Yeah, even though Victoria overall, I'd probably say it wouldn't be in the nice sweet spot of the cycle like Queensland might be, but having said that, there are always exceptions to the rules. If we do our due diligence, we might be able to uncover some hidden gems there tonight. So yeah, stick around. We're going to be doing a case study of the region in Victoria. I'm really looking forward to introducing you to some new functionality we've been working on here at Ripehouse. It's going to really increase your ability to look at multiple suburbs very quickly, to be able to come back into those suburbs every day and really zoom in on the areas of interest to you, and to be able to filter properties very quickly based on your strategy and area of interest. So I'm really excited to take you through these features. It's been sort of something in the works, and I've seen a need for it over the last 6 months, working with a lot of individuals as part of the Ripehouse community. This feature is going to really make things easier for you to search and use the tool. So I'm really excited to take you through that. We will be going through a bit of a research review. So sometimes I jump right into the advanced content and assume everyone's up to speed with some of our recent research and learnings. Tonight I will be just taking a little bit of a deep dive again into some of our baseline knowledge. I've got a lot of you on the line who are new to us here at Ripehouse, so I will be sort of going through a bit of this, the background research in the last few months and just getting everyone up to speed. I'm really excited to announce next Wednesday night I'm hosting a joint webcast event with Terry Ryder from hotspotting.com.au. He's a regular feature on propertyobserver.com.au and very well known figure as far as researching areas and suburbs right across the nation that have got a lot of upside, a lot of growth potential. He releases some comprehensive reports. His cheapies with prospects, which is a lower budget report, all the way through to core Sydney, Melbourne, Brisbane market reports. So I'm really excited about that webcast next Wednesday night. So hold tight in the next coming days. I'll send you some information around how to attend that next Wednesday night. He'll be talking about some areas that he likes, and then we'll be switching back and forth at a street and property level analysis for those areas. So it's a real end-to-end analysis we'll be doing next week. So that's coming up. Also look out in the next coming weeks. It is the end of financial year, not far away at all. We've got the Q3 best of the bunch suburb growth report coming out in the next few weeks. It's a full state-by-state roundtable. Once we find the top 3 states, we'll take a deeper dive into which regions in those states are really leading things forward. So if you remember back to Q2, which we'll be touching on a little bit tonight, Brisbane was really driving forward nicely. Southeast Queensland and the Brisbane region was driving Queensland forward, and regional New South Wales was still having a lot of upside to the peak. Let's see if that changes moving into Q3. So watch out for that. I've sort of touched on the 3 points there, but I will be talking a little bit about the Ripehouse community, the new functionality using the Victorian market as an example, and touching on some of the previous research. So let's jump right in. Wonderful. Thanks for getting back to me, everyone. Julie from Sydney. We've got Stephanie from Melbourne, Tom from Melbourne or Victoria. We've got Sandra from Sydney. There's quite a few more coming through, but fewer South Australia, sunny Queensland, one here from Western Australia, one in Northern Territory, a few more in Brisbane. Welcome to everyone. I see a few in Melbourne and Victoria, so it'll be of interest to you when I'm talking through these suburbs. So, and let's see for the others. I've been, we'll see if it's a familiar area and names that we have seen in the national media. So, jumping in, a little bit about me. I've been investing in property since I was 19. Over 10 years ago now. In my experience, and I own a number of properties. I'm from Tasmania. I've actually just moved back here recently, but I own a number of properties in Tasmania and still throughout Australia. One thing that I've always tried to empower myself with knowledge, and I've really taken ownership for my education in property. That's through network and through learning and resources, online and offline, talking to as many people as I can and researching property and really just soaking it all up. I've invested in my own education and my own development so I can rinse, repeat whatever I learn and move that forward throughout my investment journey. So I've definitely made a lot of mistakes in the time that I've been investing, gone in one direction and then the other, and then had to recompensate, etc. Going back a few years, I was able to stop full-time work and leave the 9 to 5, and that's really what I was working towards. Ripehouse has come about by a tool that I was developing in 2011 to really help me in my research, and it was a widely applicable tool. So the Ripehouse site and learning and research has all been built around that. So all I'm sort of trying to say is no right or wrong way. It's all a journey, and everyone learns from what they've done and pivots and moves on. And we're all at a different place in that journey together. As I touched on before, I won't go into this again, but do look out for the Q3 Best of the Bunch report. I'll be sending an email about that in probably about 2 weeks' time, once we've collated all the data from Q2 and getting that out. Next Wednesday, the Terry Ryder Joint Hotspotting Ripehouse webcast. It's going to be a great night with content there and a sneak peek into some of his key areas, and then how to actually invest in those for your upside and your strategy. News desk. We're always developing and listening to our users around functionality. Coming up, a bit of a hint, we've got flood zone analysis and overlays coming into Brisbane market, and also some features around how to find and source subdividable blocks and larger blocks, which is a feature that a lot of you are talking and asking about. We are really putting focus on our server and our technical delivery. So we're focusing on a lot of our pain points within our software, really trying to improve performance in peak times and spending a lot of time and effort on improving that. So that's all sort of painting the picture of what we've been doing at Ripehouse in the last couple of months. Just getting everyone up to speed. So there are a few new faces in the audience that I can see. As part of business as usual at Ripehouse, we do release some learnings and some research. We have a huge data set, so we've tracked every for sale listing, for rent listing and sold listing in the last 3 years across Australia. And we do have a lot of data around the location of shops, schools, transport, public housing, crime, incomes, high rents, and we're tracking all that as far as location. And in doing that, we can see patterns and we can see correlations and we can test out assumptions. That's all published in our regular communications. 3 of the key communications this year would be the buyer's guide to property investment. So it starts off as an introduction of things to look out for when you are purchasing investment property, but it then starts introducing the concept of how to use information and leverage that information when you're negotiating for a property. So all the research, all the due diligence in the world might not count for much if you can't translate that into actionable conversations you can have with a selling agent and potentially negotiating effectively and buying under market. So that talks to you about how to do that and some strategies and how to leverage that information. I suppose the general theme of these 3 publications, I'm a DIY property investor. Ripehouse is helping the DIY property investor with this type of research, and it's helping you to perform your due diligence on a daily cycle to compete in markets that have got a lot of upside and are fast moving, potentially with a lot of buyers agents and professionals in the market. So when you are buying in these suburbs with a lot of focus and a lot of attention and a lot of upside, you do have a lot of buyers agents and professionals also looking with you. So how can you act with certainty and increase improve the effectiveness of your daily strategy to act with certainty and avoid analysis paralysis, which I sort of see as quite common. So it's the common theme of these publications is really helping us as DIY investors act with certainty and confidence and clarity. That's really the central theme of the Know Your Purchase Strategy ebook there in the middle. It's about looking at what you're trying to achieve with your next purchase, and that can change from purchase to purchase. If you're trying to achieve primarily capital growth this time around with some yield as a secondary component, how do you make sure that strategy is clear at the suburb level, at the street level, and at the property level? How are you going to execute that end to end? And then what sort of information do you need to look for in your due diligence to be able to process and perform against that strategy? And then the Q2 report, which is soon going to be outdated, but it's still got some great information. We do a full state-by-state roundtable every quarter, looking at where each state is placed in the property cycle, which states have got the most upside to their peak, which states might be peaking out, and Sydney or New South Wales potentially are coming towards their peak. But once we've found the states that are really positioned quite nicely, we do look at the regional level, then the suburb, then the street, then the property level. So it's a full end-to-end analysis in that report. Lots of great content. That's just a bit of a touch on. If you'd like to see those or download any that you've missed, check out www.ripehouse.com.au/learning. Some other great research like our price per kilometre research to look for price depressions or ugly duckling scenarios in price in our major cities. That's all in there with links and our blog. So register to our blog and you'll be updated as soon as these become available. So just a bit of background. What it's all about, Ripehouse is helping us to invest with certainty. Sometimes, it's okay, and the suburbs right next door to where we live might have a lot of growth potential, but sometimes we might want to broaden our horizons and look across Australia to where the absolute prime markets for growth are for the short term. That sometimes introduces us to having to invest in areas that we're unfamiliar with or interstate. How do we look at those suburbs as a local would and find the areas that are real growth spots or real dead spots? So Ripehouse helps you to do that in our learnings and in our tools, and in the community we've built around of individual investors helping each other. We look for negative impact elements in a suburb, so crime or public housing, low rent or low price pockets, dead spots as far as amenities. So the three key amenities of shopping, schools and transport. We're looking for these elements, and we're also looking for positive areas. So areas where sales volume and days on market, price growth, healthy yields, high rents, high levels of tenancy demand. Where are these real sweet spots in suburbs? So locals might know that innately. They might take it for granted, but as an investor, how do we quickly get up to speed and act with certainty with a local's mindset? And then make sure that we're looking at the right street in the right suburb for our strategy. So if we've got a flipping strategy, we might be looking at a different street than if you had a capital growth strategy. That's what Ripehouse is all about, and that's what I'm going to be talking about when I'm looking at it as becoming a local area expert for these suburbs. And once you do that, it's topping up that knowledge, but you can act with confidence and you can act with clarity and you can compete with other buyers, agents and professional investors in that market with certainty, which is what it's all about. So that's going to be the common theme and relating it back to a local mindset tonight. Yeah, just to start with and to get you thinking about how location potentially and what is around a property in that street and area, how that would affect an individual property. So the exact same property, if it was sitting in 18% public housing, averaged across Australia in all metro areas, 18% public housing, you would expect to pay 20% less for that property than the suburb average. If you're in 0% public housing, you would expect to pay 25% more than the suburb average for that property. So public housing and the concentration of public housing that's in the same street as a property has a very dramatic effect on the street appeal for the property, potential growth for that property in the short to medium term, potential ability to drive rents and increase rents with the suburb overall, increase your yields, and have nice and stable vacancy rates. It's all affected by public housing and it's around it. Public housing also may gentrify fast in the suburb if there's a government policy that moves that public housing to another area, or if it's buying low, there's potentially more upside. But generally, I see public housing as a more volatile investment. So you can avoid it and know the consequences, or seek it out and know the consequences. But it's something that has a very strong impact with property price, and something that we focus on a lot here at Ripehouse. and knowing this as a local area expert to see how it will affect our purchase. Just moving on here, I'm just doing a quick admin check. I'm using some great new software tonight with some technical issues we had last week. So if you're on board with us last week, we did have a few issues. We've moved over to some really nice software that we've been reviewing and using and testing. Please let me know if there's any issues. If you're seeing any quality issues or dropouts, please let me know. You can raise questions. That comes through to me, but would love to hear if everyone is using it okay. So just doing a bit of a quick drop in there. Yeah, the next slide in a very similar type of concept is looking at how the 3 key amenities affect appraised property value. So a lot of you guys, I just noticed the names on the list, have seen all this before. Few of you haven't, and new names that I haven't seen at a webcast. It's really important to see the 3 key amenities: shops, schools, transport, and how they particularly affect demand for property and appraised values attached to that demand. So according to our research, it's very extensive research. We've done and looked at different things like doctor's surgery, hospitals, parks, cafe and restaurant precincts, other things that you might think are related to property value and have an effect or correlation. They do slightly, but it's not a major effect and really not worth tracking overall. These were definitely the real standouts in the big 3. So if you're sort of just walking you through these graphs here, the red lines is the average. Anything where the blue line dips above the red, you'd expect to pay more for the property, and any time the blue line dips below the red, you'd expect to pay less. So for transport, if you're right on the doorstep, you'd expect to pay more, up to 4 or 5% more for the property. If you're over 1,500 to 2 kilometres from the property, you'd expect to pay almost 6% less than the suburb average. 1 kilometre from transport, this is train station or primary bus routes, is the sweet spot. Incidental noise and the negatives associated with a train station might not be there, but you're still in walking distance. Schools, on the other hand, 250 metres is the absolute sweet spot. Right on the doorstep is not ideal. In summary, and shopping sort of fluctuates all the way through from 0 to 1,300 metres. Anywhere in that zone, with shopping is okay, and it drops off a cliff after that 1,300 metre mark. So definitely visually just trying to establish that correlation. This is obviously different for different types of suburbs. So how remote the suburb is, if it's in a city, rural, definitely changes. It does change from city to city. This is an average. Ripehouse knows the location of all these things, and it knows property location. So it looks at the different suburbs that we look at in question, and it knows the relationship between these and price for you. So it's a bit of a heads up around how this is important. Yeah, key takeaways from this part of the content, and this has been a bit of a get up to speed session, so I do apologise if I've covered some old ground. I've taken over. We've got the Q3 report coming up. This is part of business as usual at Ripehouse. Key learnings and research to help you avoid spinning your wheels and avoid losing out to other professional buyers agents or property investors in the market. So it's really about digesting this information and helping everyone and helping us digest the information to act effectively with clarity and conviction every day in our research and in how we talk to agents and make decisions. So it's not just the research, but how to process that as well. Moving on, next part I'd like to talk about is what tools, and I will be illustrating the Ripehouse tool set tonight when looking at this Victorian market and covering off the new features. So it's not just the learnings and the research, it's about using that on a daily basis with the right tools and the right websites and network that you have around you to be able to leverage the information that you do have to negotiate and position the conversation with the agent. That's probably the key. Information is a waste of time if you don't know how to leverage that information effectively with the agent. Last week I did touch on how to assess condition, find valid comparables for property, and then potentially find negatives with a property that you don't mind, you've assessed, you've built that into your appraised value, how you can leverage that into the conversation with this selling agent to put them on the back foot and potentially negotiate on your behalf with the vendor. So, you're trying to set that vendor up to be more receptive to what the agent's got to say and set the agent up to be more receptive to what you've got to say. So that's all about using the right tools, finding the information, and then being able to process it effectively and make your due diligence process very robust and effective. So to that end, I will jump in and show you now a quick demonstration of the Ripehouse main tool set. I won't go into a lot of the suburb search functionality tonight. I won't go into the price per kilometre research, which shows visually on a suburb map dead spots in price that you can potentially target. Lots of ways that you can get to the suburb through Ripehouse. So we do analyse sales volume, rent per week increases as two very big keys for capital growth and short-term capital growth. We also track rental yield, and we have a cash flow metric that you can track to find suburbs that are primed for their cash flow and yield and low vacancy rates. And we also have a flipping score where you can track suburbs right across Australia that are primed, absolutely primed, to enable your flipping strategy to succeed. So that looks for suburbs that have predominantly in high demand of houses, 3-bedroom houses, high price spread between unrenovated and renovated, and large percentage of owner occupiers. It will rank suburbs based on those criteria as an example. So I won't go into the search functionality as such. We're really going to focus on how to dissect this Melbourne suburb that I'm going to be talking about. 300k is an acceptable price point in this suburb. Great cash flow, great capital growth upside, and I'm going to be demonstrating the new custom strategy area overlay. So let's jump right in. I'll just flip my screen over now. So excuse me if there is a bit of a delay in doing that. I won't be a moment. Okay, everybody, I've just switched now over to my other browser and initialized everything. Just let me know if you can see the suburb map here for Epping, which is in the northern region of Melbourne. That's my big aha surprise. This is the suburb of Epping. I'm not a Melbourne local, and I'm not overly familiar with a lot of these suburbs in Melbourne. Generally, I drive between the airport and the city and go and watch the AFL when I go to Melbourne. But yeah, there's been a lot of focus, a lot of investors, in the last week or two, potentially by chance, but potentially by something that has been put out there in the media, towards this Craigieburn, Camberfield, Layla, Epping region. It's all focused around these northern access points to the city. So we've got train line through here, if we can zoom in, that goes straight through Layla and starts here at Epping. We've got some M31 as the main highway. There has been a lot of money spent on infrastructure coming from these suburbs into the city. There are a couple of questions here. Reza, I'll jump onto the public housing question in a moment when I illustrate that, and I'll demonstrate how we can find public housing at a street level. But sort of going back a couple of steps. So we've been going through a lot of suburbs recently in Queensland. There's a lot of really nice alignment in Queensland at the moment, and a few really nice growth areas. I really follow and respect the work of Terry Ryder as a suburb level researcher. He goes into a lot of detail and does a lot of research across the nation, and gives a lot of information about different suburbs and the reasons why they can potentially grow. He has spoken and does like this northern region of Melbourne, so definitely check out hotspotting.com.au for more information about. He goes into a lot of detail, 10 pages of research for each of these suburb areas and why they are potentially primed for growth. There's been a lot of public and private spending in this Epping region. So I am focusing on Epping there. We can look down at the Layla, and there's a few other suburbs around that do have similar growth prospects. We've got a Westfield in here. We've got New West Freeway, $2 billion spend Through here, we've got some distribution centres for major infrastructure and lots of public-private investment. It's as a very primary area. It's a high, a primary and strongly nominated area as far as the Melbourne Victoria planning strategy is concerned. So it's definitely earmarked for population growth. Lots of things in alignment. Definitely encourage you to check out Terry and hotspotting.com.au. But at Ripehouse, we do also track key metrics at a suburb level across Australia that we have determined are linked to future growth. So they're basically buy signals. The cause might be all of the things I've just mentioned, but the effect is what we track. And the effect is sales volume increases in the short term, days on market are stable or decreasing, rent per week increasing in the short term, and rental volume stable. When we see those things in alignment, the suburb ranks very highly. So for every suburb in Australia, you can actually search for and order them in those metrics. And we can see that this suburb here is ranked in the 86th percentile in Victoria for its capital growth potential. So very highly regarded. What we can also do is we can zoom the map out or readjust the map in any way. And we can click on this toggle over the right-hand side here and see if this suburb is ranked highly for capital growth. And when they are, they're coloured in the dark blue. And I like to see the suburbs surrounded by other suburbs in dark blue as well. And when we do see suburbs grouped together, the darker the blue, the higher the capital growth score, the higher the capital growth potential. Definitely seeing a cluster would be for the potentially similar reasons that they are having these buy signals. And there's definite cluster as we're going in. And if we move further down the map, there's lots and lots of blue, focusing all the way through on that transport channel through to the CBD, and definitely extending out here to Epping, which has the lower price point. So you can zoom the map out, and you can find areas of blue. You can target those and take a deeper dive. You can also click the click to search button on any page and do a tabular search, which is very similar to what we've just done visually. You can change your catchment area, your price range, your distance to CBD as your boundaries and level of crime that you're comfortable with. So very robust search functionality at a suburb level. You can do neighbourhood comparisons and compare Epping to its closest 10 neighbours and all the key metrics, and that you can take a deeper dive in that way. And that's a nice way of seeing if Epping's cheaper than its neighbours, if it's a price depression, etc. So lots of ways of zooming in on a suburb. But tonight I'm going to assume that we've basically settled on Epping. We can take a really deep dive and have a look at the key metrics for the suburb. So nice rental growth, a bit of a dip in sales volume recently, but very stable. A lot of detail there to go into. We've got a 20-page report we can print off around the suburb and lots of detail around where all the different things are located in the suburb and the key analytics for the suburb. So, we've had quite stable 1% growth in the previous quarter here in the suburb, but 3% rental growth. And there's a lot of key metrics that we can track here for each suburb in Australia. But I really wanted to take a deep dive into how to analyse the suburb at a street level. And that's something that might not be done very well by a lot of investors and a lot of other ways of sort of researching and finding investment properties. We come to a suburb, we've come to Epping tonight, but how do we actually find the streets to really have the most upside for our strategy? I am going to assume that our primary strategy tonight is capital gains, where I'm going to take you through the process of finding the streets within Epping that have the most upside for capital growth. But I'm going to say that yields are quite important, and I will like to have above average yields in the suburb. So we are able to see exactly where the yields are the highest in Epping. We won't have to settle for streets that have low yield. We can seek out the high yields and increase our upside and investment success that way. So it's all about finding the hot spots and the dead spots in the suburb and knowing which ones to seek out and which ones to avoid, but making sure they are very relevant to our personal strategy. Thanks, Michael. See, he's mentioned Northern Corridor is good value at the moment. Eastern area has already moved. And a lot of you can say thank you for seeing the slides. I just popped a hand up there and I thought I might jump across. So when I come to a suburb, firstly, I like to see how many properties are on the market. So Ripehouse is a search engine that goes across the internet like Google does. It finds on-market properties and it lists them. One thing that you can see within Ripehouse, 186 properties currently on the market. You can see the full days on market for the properties, and you can actually see properties that have been discounted. So you can order properties based on price, discount amount, or days on market. So, you can actually select this here and see all the properties in the list which have been discounted the most. And this property here has been discounted by 8%. It's also been on the market 377 days. So you can definitely click in here and potentially leverage that information to negotiate and really put the pressure on the agent and the vendor. So we're all about tracking properties now. Each of these red icons on the map are property icons. The darker the red, the higher the price. The white icons, or the whitish icons, sorry, are price withheld or auctions. One thing that I really encourage you to get the feel for to start with in the suburb is the price spread. So 322 to 407 is the price spread. Roughly translate to unrenovated to renovated. We have seen high correlation between the lower quartile price and unrenovated property and the upper quartile, and generally, well conditioned or well presented properties. Definitely getting a familiarisation with the price spread to start with. This is current on market price spread and current for rent price spread between 350 and 380 is what we're sort of targeting. I'd like to now get familiar with what's most in demand at the suburb right now. So it looks at what are the most common types of properties, but then also what have been the most common that have been sold in the last year. And that's 3-bedroom houses are most in demand and most common. Incidentally, Epping has a high number of renters, very low crime rate compared to the local government area, but above average concentrations of public housing. So we're going to be sort of keeping those as red and green flags in our further research. So let's look at 3-bedroom houses to start with. 186 currently on the market. I just want to see the price spread for what we're actually targeting. If 3-bedroom properties are most in demand and the most common type of property, let's not reinvent the wheel. Let's not go and buy a white elephant. Let's buy the most in demand property type. Really set ourselves up for nice, strong tenancy demand and the ability to increase rents in line with that demand. So I want to actually see what the price spread is for 3-bedroom houses before I really do anything. And there's currently 63 on the market. Price spread is between 330 and 379. So that's our new point of truth. It's really important to notice that and keep an eye on it. So now my job is to use these tools here on the left to find individual streets in the suburb that are really going to work well for me. Capital growth, I generally like to see low areas of public housing, lower than average. Any of these toggles relate and turn on areas on the map, and each area relates to 200 dwellings. So I might just zoom in a little bit here. Each of these areas surrounded here is 200 dwellings. The larger the area, the less dense the property. And the darker the red colour in this case with public housing toggle, the higher the percentage of public housing. So we're only dealing with 2% public housing, which is not much in the suburb overall, not really going to be an issue in this suburb analysis. Some suburbs you see with really high clusters of 70, 80, 90% public housing, definite lower standard of tenancies and higher volatility in these areas. Only 2% public housing, one red area down here standing out. In answer to your question, this is how you find the public housing using Ripehouse. 17.8% public housing in this block area here. That is a definite cluster, and when there's very little public housing anywhere around, so only 4% next door, 2.9% down here, 2.5% here. This is a standout in the suburb at 17.8%. And when you see a large differential between the average and an area like this, and it's not surrounded by other higher areas, this is probably regarded as a very downtrodden area within the suburb, and locals probably look at that in that way. So probably a bit of a risk factor and a volatility risk in this particular street pocket. And you can look at the overlays that surround that. Foxes are merely crescent is a block here of lots of public housing. Some suburbs you do really need to avoid the public housing. And in this suburb, I'd probably set my tolerance at that 10% mark, and I wouldn't want to invest in any streets. This is quite subjective, and there's a lot of sort of logic I've gone into it. So I'll definitely you can grab me and pull me out and ask questions. I could spend a whole webcast just talking about public housing and how to seek out and avoid it and how you can use it to your advantage or not. But yes, I will be touching on this in a few moments, but I'll be looking at probably 10% tolerance for public housing in this suburb is what I'd set it at. And I'd avoid properties that are located in streets with more than 10% public housing is my logic. I want to look where renters are renting and owner-occupiers are living and owning. If we zoom out a little bit, anything that's shaded in the yellow, so down here is very strong yellow, focused around the train station, is predominantly tenanted. This is 49% tenants here, 57% tenants there, 40% there. I'm basically looking for yellow. I don't want to be owning and buying an investment property in these areas that have very few tenants at all. So basically no tenants at all in these areas. lot of industrial areas over there, so not many properties probably, but 10% renters over here, probably stick away from that. 8% renters. Let's focus on the areas of yellow. Nice yellow areas as far as occupancy type means lots of tenants, lots of tenancy demand. This is where tenants are seeking out to live now, and it's going to work really well for us to have consistent rents and rental increases. So I won't go into which one is going to align with our strategy because that's going to be the new feature. It's going to make this very easy for us, but this just shows you where the different types of occupancy type is in the suburb. Property type, another toggle. Green means houses. If you remember, green is what we're trying to seek out. So a lot of these tenanted areas here with very strong levels of tenants are actually targeting units. Yellows are units. 40% units here, 43% units. So a lot of the green through here still had high levels of tenancy and lots of houses, which are what we're targeting. So we're looking for that mix of tenants renting 3-bedroom houses. So that's the green area in this toggle. Areas of high price, so areas of yellow, high and low prices. Rent, areas in purple are above average rent. So if you can remember, a lot of these 2-bedroom units with the high rental density actually had lower than average rent. Few areas through here and a lot of the owner-occupier areas have higher than average rent, but we're looking for the areas with high amounts of tenants, high amount of houses and high rents. So we don't have to keep track of these anymore. I'll show you the new features in a moment. We're also looking for areas of high income. Purple is high income. High incomes help you back up the high rents and have that more sustainable. And let's target the areas with the most yield. So we've got 5.1% yield overall in the suburb. These yellow areas here, so this one has 6.9%, 7.6, 6.7, 9.2% yield here in the high public housing area. Probably very low purchase price, and you sort of have standardised rent when there's a lot of benefits sort of in the street, etc. But we don't have to settle for 5.1%. The Ripehouse tools really help you zoom in very quickly on the areas that are going to deliver against your strategy. And if your strategy is high capital growth, you want high capital growth and 7% yield. You might be turned off this suburb initially, but you can definitely seek out areas where you would expect to get 7% yield, and you're going to be able to achieve it quite easily or relatively easily. So we can see exactly where the key amenities in the suburb are: school, shops and transport. We can follow the bus routes. We get a really good feel for that in any suburb. What I've tried to do there is I've tried to get a really nice feel for the suburb and where I want to invest. And before, you'd actually have to keep track of all that manually and sort of manually document and track where the strategy would sort of line up and have quite a unique knowledge of all of these toggles and how they work to your advantage. We've actually got a new feature here. I'm just going to refresh the page and move to another tab, so excuse me while that's loading. Just checking questions. Yeah, Reza, I'll get to that question around subdivision at the end. I've just loaded the suburb up to access the new functionality. When I've got the webcast happening, it's sometimes a little bit slow in loading things up. We've got 186 properties coming into the mix here. Lots of activity in this market. It's loading things incrementally and getting us ready to be able to press on this custom filter, which is what I'm really looking forward to showing you all. Yeah, basically a capital growth strategy, and we do recommend and have toggles that recommend these areas. So this is the old way, the strategy overlay. Anything in the green is actually right for flipping, anything in the blue is right for capital growth, and anything in the yellow is cash flow. That's a very strict requirement, and definitely there's the scope for there's a definite scope for fine-tuning that, and in this case, so I'm just going to have to get my assistant here to help me with my screen and my dashboard. Where am I? Yeah, and in this case, we can be a little bit more flexible. So if we go back to the top level, capital growth, when we look at all of those area toggles, might be a very strict requirement. We might want to accept a little bit more public housing. We might want to accept a little bit more owner-occupiers into the mix, not go down to the 10% areas, but we're willing to accept 1 in 3 or 1 in 4 owner-occupiers into our area. How do we adjust our tolerances for all those things in and really match what we're looking for? Standardize that, be able to save that as a config, show those areas on the map very quickly, and then filter properties based into those areas. So when we load the suburb up in the first place, all we need to do is click on our loaded and saved custom area, and that will only load properties up into those regions that we're looking at. So I'm just going to switch back. We've got things all on board here. I do apologise about getting all the hands on deck. Let me know if you can see the main suburb analysis page here with the custom strategy overlay settings pop up in place. I've got all of this ready and going now and on board. This is the new functionality. This is the new pop-up feature. Basically, we've taken the time to sort of look at all the individual toggles on the side. Each of those toggles relate to a heading down here. So we've got public housing by area filter. We've got 69 areas in the suburb overall. Lots of 200, so each area relates to 200 dwellings. And we've got public housing, so 0% public housing in some areas and 17.8% public housing max. Each of these elements or toggles has a slider with a maximum and minimum constraint, and you can see if we adjust this toggle down to the upper quartile of 3% public housing, it's actually only giving us 50 areas that have 3.1% public housing or less. So you can sort of, you become what you're familiar with. If you're only going to accept 10% public housing, we can set that here. If you only want to accept 3% public housing, we can set that there. But at this point, I might set it around the 10%. We can actually click on any of these icons. So we've got capital growth, flipping, and cash flow, and that will load preset configs for all of the variables. Occupancy type, property type sliders, rent per week sliders, income, and yield, allowing us to really define the exact range that we're looking to target for each of those variables. As you can see, we can click on any of these strategies and it will move these ranges to only display the areas that suit our criteria. You know, at a public housing level, we've obviously got all of the areas in the mix, and as that falls through the net here, we've got we're looking at the median occupancy type, so 50, you know, whatever's the median level of tenants or below, or above, sorry. If we're looking at that as a filter, we've only got 35. If we pass that through property type, so we're looking at predominantly houses, that passes through another filter and it gives us 15 down the bottom once we've gone through all the filters. We can now adjust our tolerances. If we start with a capital growth strategy, we're willing to accept a little bit more than normal public housing. Still not going to be a problem unless we go to that maximum area. Occupancy type, I probably might to tighten it up a little bit and target 25% as my minimum number of tenants, so 1 in 4. Property type, I'm willing to accept. There's not many units at all in the suburb at all, but let's not have the areas that had very high numbers of units. Rent per week, I'm actually probably willing to go down to 330, 340 rent per week and open that out a little bit further. You know, this is basically trying to customize this exactly to your own personal requirements, and I can help you do this, and our Ripehouse support staff can help you do this. Yield's one which is very important. In this case, I'd actually like to target the higher areas of yield in the suburb. So I'm not going to accept anything under 5.5 or 6% yield. We can play with the tolerances here and see how many areas are going to be selected. And if we set it here at the median, we're actually only going to get 2 areas across the whole suburb that suit this requirement. We can save this. So once we've actually got this config done, we can save it and load that automatically for every suburb that we're coming across. So we can click those buttons there to do that, the save and the load buttons. But in this case, I'd like to apply this. It's going to find 2 areas for us that match our requirements. And here they are. And there's only 2. They are quite small areas. We could have loosened those requirements and got a few more, and they may have been near each other. But this has been a very strict requirement for the purposes of this example. This is probably where I would be really focusing my attention on. They are very small geographic areas, and we can open that out a little bit further to get a few more options. But what the purposes of this example have been, once you've got those filters set, you're focusing on the absolute upside and key potential for a suburb. We only care now about the properties that are located in those areas. So let's put on the custom strategy filter. Let's find the properties that are located there. Let's find houses in this area and see what's on the market. This is now going to be our point of truth. This is the price spread that we actually care about. It is going to take a few seconds to apply this filter. We've got a lot of properties to go through and a lot of areas. But we're going to be laser focused now on the properties on the market that really mean something to us. We're then going to be able to assess condition of those properties. We're going to be able to view all the listing history of the properties and be able to use that in our negotiation. Ripehouse has got a lot of or sales history data, so we can goes away and it looks at it has an engine to assess condition automatically for properties. It will find comparables that it deems in a similar condition to the property you've got in question. It'll look for properties that have sold in the last 3 months with very high priority, same number of bedrooms, same number of houses, and form a comparable analysis for you. You can actually vet those comparables. You can take ownership of that process, and if you agree or disagree with the comparable, you can keep it or leave it. Once you are happy with the top 6 comparables, it will then take them and form an appraisal analysis and give you a appraised value for the property. So that's done that. It's taken a few seconds to happen, but it's actually now narrowed things down to 4 properties that fall within that range. We've got one outlier over there that's had a bit of problem falling into the mix, but it's literally got us down to focus on the absolute gold in this suburb. So this is in a real sweet spot. It's near shopping schools, a little bit further away from transport, but it's in a growth area with high rent, high income, high levels of tenants, high level of houses, low public housing, and high yield. A real sweet spot here. And these are the properties that I would actually start my due diligence process on with gusto, at the detriment of other potential properties across the suburb. So when I'm doing this, we've got all the images here. I'm trying to gauge condition. I'll do this quite quickly and take you through this process, but it definitely looks like it's pretty new, in good condition. The engine's automatically assessed it to be in good condition. It's already nominated that. You can override it. If we assess that condition differently, it's been on the market for quite a while, holding around here, and it has been discounted a number of times. All that information is there. We've got suburb, area, and strategy information. All of the boxes are ticked through here for this property. It's looking very good. Comparable analysis, it's going to go away, as I mentioned, and pull comparables, take them into the appraisal page here and give us an idea of the property's appraised value. I won't sort of play around with this too much, but you can remove individual properties that you disagree with. You can view the images and then form if it is a valid comparable or not. It will take those top 6 across for rent and for sale for sold properties and give you the appraised estimate, and then you can take that and print that off in a report and use when you're talking with the agent. This is for any on-market property or any property that's not on the market, and you can add the address and view all of this information for it. It's going to tell you that it might be a little bit too far away from some amenities, or there's a bit of concern around public housing. It's just giving you a bit of an awareness around potential negative effects of the location. So very comprehensive. Or coming into this suburb as an unknown, unfamiliar person, or becoming a local area expert and really trying to work out where the growth and key growth and yield drivers are going to be. And then we're performing due diligence on only the cream of the crop, the properties that are located in the best areas that are most in demand and potentially going to give us the most upside. So once all of these filters are saved, once you load into the suburb, you can add it to your shortlist here. Every time you come into the suburb, it will ask you if you'd like to apply this automatically, and it will just get you down to those 4 or whatever it is, and you can monitor price fluctuations, discounting, listings coming in and out of the market only on the key properties that you're interested in, is the concept. Yes, a couple more questions there. I won't grab to those. I'm just going to jump now back into lots of other features on this page. You can see all the for sale, for rent listings, sold properties as icons on the map, heaps of content and research ability in this page. So I'm just going to jump now back onto the slides. I'm aware of time here. Now I've just jumped back into, I'm just moving things around. Moving forward, so we've got a lot of research, we've got a lot of learnings, and we've got an insight here into some tools that can really help us to compete in these markets with buyers, agents, and property professionals, improve and increase the effectiveness of our daily process, avoid acting with analysis paralysis, making clear and decisions with conviction. A third element to that whole process is partnering as part of our Ripehouse community, which is a group of DIY property investors, me included, joining up with other groups of like-minded investors with different experience levels, but potentially areas that you're focusing on to achieve similar things and in similar areas. Our property partner groups of 5 investors that we put together. You meet regularly every 2 weeks in private conversation that we moderate, our staff moderate, helping you to use the software, other research tools, other information, helping you digest that, helping you focus on your goals and aspirations and helping each other to achieve it. The groups are really good for accountability and managing that, helping each other retain focus, digesting new learning, supporting each other and really motivating each other to strive towards our strategy. So they work really well. We have fortnightly video catch-ups and share what we've been seeing and what we've been doing, and then bi-monthly full-on case study events where we go through the real cream of the crop, what we're seeing, and we take a very deep dive into those with lots of questions and answers. So that's a really key part of the Ripehouse community. We've got the learning, the tools, and our property partner groups to top it and finish off that cycle. Ripehouse community is for the DIY property investor. It's trying to help us succeed and work together to really nail our goals and own our education and research and search process. And it really does take the three elements: to discover, the empower, and the nurture, for it all to come together, I feel. We've got some really nice feedback here from recent. Actually, I've had some really nice feedback in the last week or two, which I'll have to jump in here and update. Andrew purchased in Cairns, 7.3% yield. Cairns is quite a good market. It's come through a bit of a bottom and bottomed out and had a bit of a few false starts, and it does seem to be really aligning quite nicely now, and had some third-party recommendations as well. You can sort of negotiate and buy below market, potentially up there quite well with high days on market. Andrew's had a great result. Donna and Cassandra really complimented us on our new features. That was our previous round of product updates, which happened about 6 weeks ago. And Tina is executing a flipping strategy in the northern quadrant of Brisbane. And I do need to get an update and put that update into the slide for next week from Tina around the success that she's been having with the property. And it's probably going on a little bit longer than she would like, but a lot of demand still in that northern quadrant of Brisbane. So yeah, the Ripehouse community is a subscription-based service. We operate on annual subscriptions, which do allow full access to the tools, primary and preemptive access to our research, exclusive webcast content, and the property partner groups as the full Discover, Empower, and Nurture solution. It's normally $797 per year. And as a thank you for taking the time tonight and really being interested in our research and content, I'd love to thank you by offering you a $200 discount on that annual subscription price. I'm going to enable it for the next hour and bring that down to $597, and also to sort of onboard you and make you feel part of the community and take you through the tools and the research and your own strategies and requirements. I'm going to own the process of helping you in that journey. So for the first property that you purchase after you become a member, I'm on hand to be your one-on-one investment partner. Using the tools on Skype, we can catch up, emails, phone, whatever it takes with you to digest and research and act with clarity and conviction and purchase your first property or your next property using the Ripehouse tools. But it's really sort of standing by you and making sure that happens and really executes against your strategy. So for the next hour only, I'll open up a one-on-one coaching with you, the $200 discount. To activate this discount, I will be sending an email to you shortly. For the next hour or so, I'll sort of open it up tonight. You can also go to www.ripehouse.com.au/discount. That will take you to our standard subscription page, but it has that discount active for the next hour only. Do scroll down that page because the offer is there in a big green button, the Join Ripehouse button, which will enable that offer. It will take you through to our payment provider, which is PayPal. Very secure payment provider. We don't store. They store your credit details. They manage your registration and an account, and then that will redirect you back to Ripehouse, and your new account will be waiting. You will receive a welcome pack via email very shortly after that. Do check your spam and promotions folder because sometimes all of that content comes through to there, and would hate for you to miss out your account details and get right straight into it. We have live chat support integrated into the page with any questions that you might have. All hands on deck with the webcast tonight, and we'll be jumping back into there after the event to answer any of your questions. Email support, we've got the 1300 number on the site for live or phone support, and as soon as you get the first email from me, you have all my personal details and contact details as well. So yeah, as I mentioned, this special offer will be also sent to you via email and enabled for that as well. just as an extra thank you, I really respect and love the work that Terry does at hotspotting.com.au to really get you kick-started and moving quickly in your suburb search and start processing some really great research and content for the next hour only. On top of that $200 discount, I'm offering you, as part of that $597 package for the year, a free hotspotting.com.au report valued at $77. That's only for the next 1 hour only. I can talk to you about which region you'd like to focus on, and we can get that report to you, which will show you the key suburbs. And then we can link that up and match it with what we're seeing with the Ripehouse capital growth metrics, and then take a deep dive into those suburbs. So it's an absolute end-to-end solution of research and tools and users and the property partner groups to really help each other to really kick a really big goal with our next purchase. That link again is www.ripehouse.com.au/discount. Offer a 30-day money-back guarantee with no questions asked. That's enforced by PayPal as the provider. If it's not for you, and you've got the opportunity to jump in and start using the software, if you really want the support of a buyer's agent and that's the direction that you're wanting to go in, no questions asked with the refund, so there's no risk. We do, it might become, you do want that buyer's level support. That is a different option. I'm about education and self-improvement and really owning that process so I can rinse and repeat it for every purchase down the track towards retirement. Buyer's agents serve that purpose. They, have a $10,000 fee attached to it or whatever it may be, and they own that process for you. And you might not necessarily learn much from that process, but the investment is there, and it's potentially a very good quality solution and investment. Ripehouse is all about self-education, self-empowerment, and really owning the process of success with our strategy. So we're on hand to help with all that, and everything we do is with that end in mind. Just another note, it's the end of financial year coming up. The $597 special offer is based on your current rental income and tax structure, tax deductible. And just a bit of after the financial year, we are looking at a price increase. We are really focusing on our R&D, improving the product with the new features that we keep coming through, and really focusing on that. After that 1st of July, there will be a price increase. So this special offer has a limited time attached to it in that regard. So I'm on hand now to start taking us through some questions. I am aware of time and how we are going tonight. Jump through to jacob.field@ripehouse.com.au at any time for any questions or answers. As I mentioned, you will be receiving an email with that discount offer, www.ripehouse.com.au/discount, to lock that price and that thank you offer tonight. So I'll jump into some questions. If you don't want to stick around, that's all good. I really do appreciate and thank you for your time and sharing in this analysis of Epping in Victoria, a really nice region, some alignments with our growth and capital growth buy signals, and with what Terry Ryder at hotspotting.com.au is saying as well. Jumping in, we've got Reza with his question around how to find properties or areas with potential to subdivide. So I like to look for areas that have lots of houses to start with in the suburb that we can target, that are already there, generally larger block sizes. We can take a deep drill down to the property and see the square metre by jumping into the original listing and viewing that. I can take you through that individually and show you how to do that, but it's also looking for those individual areas in the suburb to start with that are larger, and then they're going to be home to larger blocks that we can target. So if we are searching in the suburb, we're going to really zoom in, and we can use there's a filter that I didn't show you tonight where you can actually take properties off the map that are not located in a certain geographic area. We can draw a box on the map and find properties in that. It will take properties out of that box. We can draw those around all of the smaller geographic areas and just view the properties that are located in those large ones. Filter it based on houses or land, and then we know that those areas are also home to lots of other houses, and we can do a one-to-one property analysis that way. So it's helping us and saving us time focusing on the absolute most likely areas that we can do a subdivision for in the suburb. Numbers on the roads, Maggie, that's basically directly from Google Maps. That relates to each of the major artillery road or artery roads throughout Australia have a number denotation. So the M1 or I think that was the M31 from memory. Yeah, that's basically the identifying number on that. So that's basically Google Maps. It doesn't relate to any data within Ripehouse. Yeah, Marie's just asking, great new function. It's actually already enabled, already working against your account, Marie, ready to go. I do know, yeah, it's going to save with how we've been talking back and forth. It's really, it's been molded around your conversation and a lot of other investors to really nail that process and do it simply for you, ready to go, and on hand if you wanted to give me a call or email, and we can take you through it one-on-one if you like as well. But yeah, I've been really excited personally to get this functionality out. I might leave it there. I'm on hand via email, phone with any questions. I really do thank you for your time tonight, and I hope you've found it beneficial.